Bitcoin is the highest form of property. It's the apex property in the world, and it's the best investment asset. So the end game is to acquire more Bitcoin. Whoever gets the most Bitcoin wins.
Whoever gets the most Bitcoin wins. MicroStrategy chairman Michael Saylor, a longtime Bitcoin bull, raving about Bitcoin as an investment, the digital asset reaching new highs this week, coming off the launch of spot Bitcoin ETFs. Crypto-related stocks such as Coinbase also doing very, very well, up roughly 50% since the start of the year. Next guest saying that there's still a compelling upside case to the crypto exchange. We want to bring in Devin Ryan, Citizens JMP Director of Financial Technology Research, joining us now. Devin, it's great to have you here at the desk with us. So just first, your reaction that we've seen to the massive increase in the price of Bitcoin, and obviously Coinbase, a big beneficiary of that.
Yeah, absolutely. First off, great to be here. What we talked about, we actually put a report out last night. There's been $10 billion of net inflows into these ETFs over the last 2 months. We are saying that we think there will be $220 billion of additional net inflows into these ETFs over the next 3 years. So the comment is that the ETFs are truly transformational for this space. What we're talking about with the ETFs is there's $25 trillion of financial advisor-driven money that really hasn't even been allocated yet, and the ETFs open the door to that part of the market. And so, of course, yes, when there's big demand, the $10 billion is driving prices higher, and then ultimately that's really good for companies like Coinbase because they're benefiting both from the ETFs directly in trading those, but there's a lot of interest just in crypto more broadly, so their trading volumes are up over 100% in the first quarter over the fourth quarter. And then, bigger picture, Coinbase to us is really a play on just the evolution of the asset class. And so that's really, I think, what people have missed so far in the stock, and that's why we think there's still quite a bit of upside, because they're going to evolve their business model with the evolution of the asset class.
In terms of flows, when we look at Grayscale's Bitcoin ETF, definitely struggling a little bit. I see the smile there. Over $7.5 billion of exodus there in the first 30 trading days. Is that an idiosyncratic issue for them, or is that indicative of maybe some outflows to come for other names?
Yeah, I think they're really specific. So there's at least a couple $2 billion of that you just cited that's related just to some of these bankruptcy estate sellings, and I think that's already generally played out. And then there's also some selling from people that initially got in to Grayscale because they were just playing the trade around the premium that the GBTC was trading to Bitcoin several years ago, and then ultimately, even more recently, the discount. And I think there was some traders in that, and so some of those folks have exited. And then you're seeing a little bit of rotation too, where some people have been selling that ETF and going to some of the lower fee ETFs. So they actually just announced yesterday another ETF structure. So I think they're going to be back in the game, potentially bringing in inflows. But yeah, I think of that as really idiosyncratic. And then the net flow story is really what we're focused on, which is $10 billion over 2 months.
You mentioned the fact that you see Coinbase's business evolving, the platform evolving as the industry does. How so, and what does Coinbase need to do in order to maintain that edge?
Yeah, I mean, I think that's really the key story. We've been framing Coinbase as, it's a little bit cliche, but the Amazon of crypto. And what I mean by that is, they got into buying and selling, as an exchange, really as that was the first foray into crypto. That's becoming increasingly commoditized. Now, there's still going to be huge growth in the exchange platform, but Coinbase is really the primary on-ramp, or one of the primary on-ramps into the asset class. So if folks want to get involved in payments or remittance, or in our opinion, tokenization of real-world assets, Web3, they have their own blockchain called Base. They're going to be involved in virtually every aspect of how this industry grows. And then there's going to be parts of this industry, in our opinion, that are really idiosyncratic to crypto. So, staking is an example, and there'll probably be other innovations. So Coinbase is going to be involved in all of that, as they already are. Their subscription and service revenues were essentially zero in 2020. Now they're $1.5 billion. I think those are going to grow a lot faster than even the exchange part of the model. So that's really, simplistically the story. And I think what a lot of people have missed, that it's all about trading and the Bitcoin ETF, and less about these other areas. And those other areas are really what's going to be what drives the revenue growth over the next decade.
Yeah, certainly. We're taking a look at Coinbase up another 5% today. Devin Ryan, always great to have you. Thanks so much for hopping on with us.